Good morning, everybody, and welcome to the Option Pit Morning Volatility Report. As I am Andrew Giovinazzi, filling in for Mark Sebastian. I am the Chief Operating Officer of OptionPit.com. Our daily chat room moderator, finder of trades and things to do, amongst other tasks here at Option Pit. I will be teaching half the course this Saturday on calendars. What the course is going to work out like this. We're going to do, like, the first half hour will just be basic calendar, let's just call it analysis, and we'll take that intro. So even if you don't know anything about calendars, you can take the course. And then what we'll do is we will expand that into more advanced calendar and diagonal calendar trading, and the types of trades really for different volatility markets. So right now we're moving to kind of low vol market. We'll discuss that, and we'll also discuss trading the high vol market using how you can use diagonals, short time spreads, and things like that when the market starts doing goofy things. All right. I know this doesn't sound very technical, but that's essentially what the course is. If you are an Option Pit Live subscriber or higher, you get it for free. Okay, so move on over to our event page and sign up. All right, well, just as I was saying about low volatility, you know, up a penny. I don't know what else to say. After January and February of a lot of action, a lot of trade, a couple things are happening. One is the euro continues to rally. Really, and we had looked at the volatility being very cheap in here. Again, going into the non-farm payroll number, we'll take a look at a trade today in here. Volatility is 9%. It's about as cheap as it's been in a while. Mostly, the market looks like it's trying to price that, that British exit out here. But, just from a straight line number point of view, we're looking at volatilities out here. We're trading about 11 and a half. The at the money straddle is 220. That $1 strangle is about $1.80. And since Yellen's testimony on Thursday, we've rallied about $2.50. With the euro trading at it looks like that's a new high for this year and getting close to broaching the highs of last year. And again, I guess this is just a capital flow. It doesn't really matter why it's doing what it's doing. The only thing that matters is that it is doing what it's doing. So again, I think implied volatility in here is cheap. We'll see. I think probably, again, as a topic for this weekend, most likely we'll look at possible if there. I don't know if a diagonal exactly fits right now, but probably some sort of double diagonal in the name right now does. But we'll look at that in our pit report in our chat room this morning. As far as volatility goes, VIX is in the 13 handle. Okay, to me that's like zone 1, vols in its lower quartile. It's not doing very much. The same we had yesterday. We actually looked at a couple of pin plays for the vol products yesterday that seem to be doing okay. As I look at this now, they're kind of hanging out right there. I don't expect much to happen with volatility. We still have a ton of future premium in VIX. I'm looking at a 1382 VIX now. If we pull up the futures, right, the April future is 1597. We still have $2 of premium in there. So that has to decay basically, 70 cents a week, because we have an extra 3 days in this cycle. Don't forget, VIX expires, I believe, on the 20th. Okay? So we got 20 more days. still that's a pretty solid amount of premium. So future traders, nobody's really willing to get too far away from the 16 handle in for the April future. It's just kind of trading under 16. I think a lot of volatility trading are mental hurdles, especially on the downside. 16 is kind of hard. That's sort of 1% per day. I don't know if all of the lagging volatility or the basically sort of the buildup we've had from January, February, is still on future traders' minds. So the way I look at it is downside moves in volatility now are very hard to happen. They're going to happen because the futures are going to decay. That affects the vol products. Same kind of idea we've had all week. It feels like the big move in volatility is kind of gone. Even if we trade into the 12 handle and VIX, that could push us down. We still have one more number tomorrow, so it's doubtful we get much lower. But we could see that kind of we could see another leg down in vol, possibly taking the weekend out, getting VIX cash into the low 13s. I would at right now at this point, any rally in volatility really to me is it's kind of a selling opportunity for the vol product. So you can buy XIV. You could look at put time spreads in VXX, trades like that. You're not getting the same type of moves we've just had. VXX literally just fell off the cliff. Right? I mean, this is a long, gradual decline, right? But when volatility trends, it trends pretty hard. And right now, you're just getting down to the bottom of the range once you're in zone 1 for volatility. It takes a while to get lower. So usually what I say is volatility moves in a direction for a reason. And right now, right, this was our old lows before. This is what I'm just going to call central bank currency devaluation. This was like we had 1, 2, 3 shots at the high vol. Market down to 1800 basically, and that's all that currency manipulation and central bank stuff started to freak everybody out. I don't know when that will return. On top of the low oil prices blowing out all the fixed income side of the market or the high yield side of the market. But here we are at a level, right, where in order to break to this lower level, right, so for a product like a VXX, which means the vol futures really have to come in more, we have to have something else, again, I think, that is very market positive, that creates like long-term complacency, maybe because there will be long-term complacency, to drive you basically down to the next level, which to me is at the very bottom of zone 1, essentially, right? Because you're just running out of places for it to go. So you're going to expect there's going to be some interest in buying the vol products, right? Buying up VXX, buying up UVXY, all those type of products. The problem is you're buying tons of decay at this point. So even though you think you're buying the bottom, it's very, very hard to make them pay. So again, we've discussed positions like that. We'll go over a new position like that today, especially since we're having kind of a micro rally in them. Not very much, but we'll take a look again today at these. So the next, really, we've got non-farm payrolls tomorrow, and then we're looking at some corporate earnings in early April. If they're halfway decent, that could set the rally training in. The only other thing I'll mention is Tesla has I wrote a blog about it last night, has basically near earnings vol going into whatever announcement they have. Stock is basically up $100. Whatever is going to happen, to me, it's like a buy the rumor, sell the news thing. I don't see it rallying a bunch, but it's certainly possible. So we'll examine some trades in there. I've been trying to do something interesting in there for a week. I just haven't been able to get anything on. So with that, I don't see a lot happening market-wise. The fact that things are moving literally in nickels and pennies. Again, I don't think it's good for volatility. If you're long it, I don't think it's good for the vol products right now. And with that, I will see everybody in our chat room later. Bye-bye.